Well, good morning. I'm Jagender Rana. Topic of the day is parametric insurance for quicker financial aid. Parametric insurance for quicker financial aid. Between 2000 and 2019, India experienced the third highest number of natural disasters events globally. The future looks grim as the frequency and intensity of these disasters are projected to increase, causing losses and damages running into billions of US dollars. So, traditional government funds may not be enough to cover these costs, highlighting the need for innovative financial solutions. One such novel tool India is cautiously experimenting with is parametric insurance. Unlike conventional insurance schemes, which rely on indemnity and post disaster loss evaluations, parametric insurance operates on predefined parameters that, when met, trigger immediate payouts. This approach is particularly crucial in a country like India, which experiences natural disasters quite frequently. So, according to a report by the Center for Science and Environment, India encountered weather-related disasters almost daily in the first 9 months of 2022 alone. So between 2019 and 2023, these disasters led to damages worth $56 billion. So parametric insurance is there for the relief. Let's understand the mechanism of parametric insurance. This parametric insurance differs fundamentally from traditional insurances. It utilizes predetermined metrics such as rainfall levels or wind speeds to trigger payouts. This system eliminates the need for individual loss assessments, allowing for quicker disbursement of funds. For example, a parametric insurance policy for floods caused by heavy monsoon rainfall might be structured around cumulative rainfall data. So, if the total accumulated rainfall in a region exceeds a specific threshold within a set time frame, the insured parties receive compensation. Now, consider a scenario in a location where workers are insured under a parametric policy. If total accumulated rainfall for a specified duration exceeds a certain threshold, the workers are eligible for financial assistance. The compensation increases with the level of rainfall up to a defined limit. This structure ensures that workers receive timely financial support without the need for damage assessment. Now understand the importance of parametric insurance. India's disaster management funds typically come from the National or State Disaster Response Fund and international aid. So the National Disaster Management Authority contributes between 75% to 90% of the funds from the central government, with the rest supplied by state governments. However, these funds are not always immediately available. International aid, while beneficial, is unpredictable and it complicates comprehensive risk management. So, parametric insurance, by contrast, provides a reliable and prompt financial response to disasters. It allows governments to assess potential damages in advance and ensures financial liquidity, facilitating faster rehabilitation and restoration efforts. So this is particularly vital in a country like India, where the economic impact of natural disasters is significant and immediate support can make a substantial difference. Now, what is the preventive care data driven decision making? The success of parametric insurance hinges on accurate data and sophisticated calculations. Insurers must estimate the magnitude and frequency of hazards over time and relate these to potential damages. This data-driven approach helps determine the threshold for payouts and the cost of insurance premiums. So reliable and precise data from sources like the Indian Meteorological Department is critical for setting these parameters. So at the end of the coverage period, the instance daily rainfall data from the IMD would be analyzed to calculate cumulative rainfall. If the predetermined thresholds are met, the corresponding compensation is disbursed as per the policy term. This method ensures transparency and efficiency in the payout process, reducing delays and administrative burdens. Now see what is the future of parametric insurance in India. As India continues to face the increasing threat of natural disasters, parametric insurance offers a promising solution to bridge the financial gap in disaster management. It complements existing funding mechanisms by providing a rapid and reliable source of financial support. Moreover, it promotes a proactive approach to risk management, encouraging governments and businesses to plan for potential disasters rather than react to them. So the success of parametric insurance in India will depend on several factors, including the availability of the accurate data, the willingness of stakeholders to adopt this model, and the development of affordable and accessible insurance products. As awareness of the benefits of parametric insurance grows, it is likely to become an integral part of India's disaster resilience strategy. But parametric insurance represents a significant step forward in disaster risk management for India. Parametric insurance represents a significant step forward in disaster risk management for India. By providing immediate financial relief based on predefined parameters, it ensures that support reaches those in need without delay. As climate change continues to accelerate the frequency and intensity of natural disasters, innovative solutions like parametric insurance will be crucial in safeguarding communities and ensuring sustainable development. So with continued investment in data, infrastructure and stakeholders engagement, parametric insurance can help India build a more resilient future. Because weather vagaries like inadequate wind speeds and decreased readiness can adversely impact wind and solar generation. Now, weather-based parametric risk insurance is gradually gaining ground in India's renewable energy sector. Insurance companies have been tailoring their products to meet the needs of the renewable energy sector. See, weather index-based insurance plays a vital role in safeguarding renewable energy projects from unpredictable weather conditions that directly impact power generation. So solar projects dependent on consistent sunlight and wind energy, projects reliant on stable wind conditions, face significant risk from weather variability. This innovative insurance solution provides financial protection by offering pre-specified payouts when predefined weather parameters such as insufficient sunlight or inadequate wind speeds are met. So this streamlined process enables renewable energy projects to secure quicker payouts and manage financial risk. So whether index-based insurance support resilience, enhance risk management, and ensure the sustainability of renewable energy investments by addressing the operational challenges posed by climate variability. So by incorporating parametric insurance, renewable energy projects can better navigate the uncertainties of climate change, reducing revenue volatility and ensuring the long-term stability of clean energy investments. So parametric insurance helps mitigate revenue volatility and ensures operational resilience by providing swift payouts during extreme weather events, reducing the financial burden and risk associated with power generation interruptions. Using advanced data technologies such as real-time monitoring and historical data analysis, parametric insurance delivers timely, dependable financial responses that enhance the viability and resilience of renewable energy investments, making the sector more resilient against climate change challenges. So with the increasing share of renewable energy installations in India's power capacity, insurers are evolving by offering climate-specific solutions tailored to the sector's needs. So by leveraging advanced data analytics and technologies like remote sensing, insurers offer solutions that enhance financial resilience against climate risk. As extreme weather events rise, the demand for parametric insurance is growing among companies looking to hedge against climate-related risk in their portfolios. A solar farm owner in Rajasthan placed a big bet on harnessing the sun with a lump sum investment. However, as the unpredictability of the climate would have it, in 2023, the state received low sunshine on several days, resulting in the underperformance of the farmers' millions dollar crop. So to clear the clouds over his returns, he opted for a parametric cover and now receives payouts on low sunshine days. He is not alone. There has been growing interest in parametric insurance among renewable energy players, including investors and leaders, lenders looking for protection against weather events like low sunshine and poor wind availability, which are uninsurable in the traditional market. So parametric cover provides financial stability, especially at a time when weather patterns have been fluctuating due to climate change. Renewable energy is one area that is picking up very fast in terms of parametric insurance in India. Basically, what is parametric insurance? Insurance pay out based on a predetermined set of conditions or parameters rather than actual value of loss. Has been available in the agriculture sector for 2 decades. It is now being added to new sectors like livestock, agriculture, warehousing, renewable energy, hydropower. The increase in climate events has given a push to parametric insurance products in India. A coverage provided to hedge against impact of extreme weather events on livelihoods and businesses. So there are 12 products already in the market and customized products are being launched by major players in the insurance and the reinsurance arena. Certain parts of India have witnessed diminishing wind and solar radiation due to climate change, which is likely to impact the country's ambitious clean energy plans. So stakeholders will need to protect their investments and parametric insurance is clearly a viable solution. All major insurance and reinsurance players have been offering parametric products for solar and wind power projects. So for the first time, a product has been devised for a big hydroelectric project in Uttarakhand, hedging against risk from floods and earthquakes. So this comes at a time when lenders and investors of renewable energy assets are getting concerned about profitability. Because investors are increasingly concerned about the trend of decreasing wind energy potential, particularly in regions where large pools of wind farms have already been established. So this is driving the demand for parametric insurance solutions. Not just in the energy sector, e-commerce players, FMCG companies, state governments, and even daily wage workers are getting parametric insurance coverage against high rainfall, extreme heat, severe cyclones, and other catastrophic events. All want to hedge their returns and livelihood against climate risk. So parametric insurance does not work on the principle of indemnity. It is agnostic to the actual loss a business may suffer because of an event. It covers the probability of predefined climatic events like earthquakes or cyclones. So there could be extreme weather events or the chaos due to earthquake, etc. But the question is, who will decide? The insurance company and client agree on a third party agency, which can be a meteorological agency, which certifies if a natural calamity has occurred and determines its magnitude, eliminating the need for a surveyor to conduct a loss survey. Hence, payouts happens quickly. So, climatic change is impacting businesses across sectors, and that is widening the products and customization of parametric insurance globally. A report by the University of Delaware released in December 2023 said that India suffered 8% of GDP loss in 2022 due to climate change. FMCG players like PepsiCo and Coca-Cola, e-commerce players, Flipkart, and app-based cab handling services, Uber are all considering parametric covers to protect their businesses against extreme climate events. Let's unpack why. Take Uber for example. Heavy rainfall affects booking on the app, affecting demand. Uber India is now in talks with insurance players to cover the risk of rainfall beyond a certain threshold to minimize losses. Now, in the case of beverages makers, Coca-Cola or Pepsi in India, fluctuating temperatures during the summer in North India could affect demand. Therefore, these companies are looking for safeguards against the drop in sales. So, parametric insurance started in agriculture some 2 decades back. But many other sectors are exposed to climate risk as well. The demand for weather-related insurance is growing steadily, driven by awareness of climate risk and the need for financial resilience. So the companies are offering this product now, because the coverage for various risks, including property and industrial risk, is available now. Products can be customized to offer coverage for most climate-related risks where data is available, ensuring comprehensive protection for crops, humans, and livestock. Thank you. Thank you very much.